we have Mrs. Doris Ditze, Head of Digital Finance, Payment Services and Cybersecurity of the Federal Ministry of Germany. Doris is responsible for including the development of strategies with respect to fintechs, digitalization of the financial markets, and cybersecurity. She is also responsible for regulatory issues in the field of payments such as PSD2, IFR, the regulation on crypto assets, or DORA, Digital Operational Resilience Act. Besides Doris, although virtually, Peter Kerstens, who works at the European Commission. Hi, Peter. Peter is advisor on technological innovation, digital transformation, and cybersecurity at the European Commission Directorate General for Financial Stability, Financial Services, and Capital Markets Union. He has led work on the European Commission's FinTech Action Plan and co-chairs the European Commission FinTech Task Force. Hi, Peter. Welcome to you both. And I am Gonzalo Perez del Arco, Director of Government Affairs at American Express. It will be a pleasure to discuss with you today. Although the title of the panel is What's Next for Payment Regulation in Europe, I think the title should be What's Not Next for Payment Regulation in Europe. Last year, we've been witnessing a kind of massive shake-up and disruption in what will be the payment regulation. Everything seems to be open for debate, and big changes are to come very soon. Peter, around 15 years ago, the EU started legislating on payments with the first Payment Service Directive and also with the interchange fee regulation. The main objective at the time was to set the ground for digital payments or online payments, and also to tackle some competition problems that the EU was facing in the payments landscape. Today, although most of the problems of these regulations have not been completely solved, as for example, the level playing field, competition, transparency, or consumer choice, the debates have already started to change and to reshuffle all this payment regulation. What are your views on this regard? And shouldn't we try to fix existing problems and avoiding them to be repeated before trying to change everything?
Well, thank you very much, Gonzalo, for this question. I would say that we always like to look forward rather than look backwards. But of course, you have to take account of what happened in the past and learn from the past in order to do your best for the future. Now, if you look at EU payments regulation to date, what it does is it regulates payment services and the institutions providing those services. It tries not to regulate the technology. We just look at, is it a payment service? Yes, then it's regulated. If it's not a payment service, then it is not regulated or not covered by payments regulation. While we do not aim to regulate technology, it is true that payments regulation in the EU to date regulates payment services involving funds. And funds, that means in legal terms, that means central bank money, commercial bank money, electronic money. So those are the payments transfers in those in official currency really are the payments that are regulated. Now the aims and the motivation for this regulation are manifold. There have been competition aims, security and trust, consumer protection, transparency, but, and this is often forgotten by people who comment on European legislation, one of the most important elements and criteria for our regulation is the EU single market. The fact that we need to have common standards across the 27 EU member states so that services can be provided freely across borders. So we have legislation that tries to have harmonized rules across the EU on matters of competition, consumer protection, transparency, security, and so on. Now, you refer to mistakes from the past, and that sort of begs the question as to, well, is the glass half full or is it half empty? I'm an optimist, and I think that when it comes to payments legislation, the glass is definitely half full or more than half full. But I freely admit that it's not completely full. We would like to fill the glass completely, but that takes some time. But if you look at what has been achieved, interchange fee levels have been regulated and caps have been set because companies themselves weren't producing, or the market wasn't producing, an equitable outcome. We have assured the freedom to provide services in the payments field across the EU. Liability rules for unauthorized transactions have been set. The legislator has chosen that authentication should be done at a strong customer authentication level, so two-factor authentication. Data sharing has been assured through application programming interfaces rather than screen scraping, so an obligation on payment service providers to share data with payment initiation providers and account information service providers. So quite a lot has been achieved already, and therefore I say that the glass definitely is half full rather than half empty. Now, we have to bear in mind that payments are a highly profitable, or can be a highly profitable segment of the financial activity, or of, to stay within this convention, the blockchain activity. But we also see that companies that have what we call a goose with golden eggs try to sort of get more profits out of it, and by doing so, they may well kill the goose with golden eggs. And we're trying to avoid that by having rules of the road that are equitable. Now, looking forward, I expect. But although I can't predict the future, but I expect that European payment rules will be extended to new forms of payments, or payments involving other transfers than transfers in funds. And if and when the European Commission gets around to making the proposals on this, and that will be a matter for next year, second half at least, at that stage, of course, the Commission will also take into account some of the disadvantages or the perverse effects or the things in existing legislation that may not have worked exactly as intended or as planned. We will then, of course, try to also address those shortcomings that will have been identified. The evaluations for that are just starting now, so I can't really say at this stage what the extension of the scope of the legislation would be, nor what would be the problems that we would seek to address. For that, we will do a full consultation and a full impact assessment. Thank you.
Thank you, Peter. The European Union is currently debating the regulation on marketing crypto assets. It's a look at the future on what will need to be regulated very soon. But when we think of the PSD2, the Payment Service Directive 2, and the implementation of strong customer authentication, and how complicated it was to get so many different actors involved, payment service providers, schemes, merchants, consumers, and also the timelines that the regulation set in order to implement all these legislative package, we also tend to think that sometimes this legislation is not fully in line with reality. Doris, taking into account these elements, what could be improved ahead of future debates on a revision of PSD2? Or also, how could we avoid having a legislation that could become a burden that could potentially kill innovation?
Yes, thank you for the question. Of course, we are always thinking about how to get better, but I think we should not forget that PSD2, with its two major points, the access to payment account data and the strong customer authentication, was back then a kind of revolution, and it was kind of a revolution also perceived by the fintechs, because it was the first time European legislation dealt with the access to data outside the GDPR. And this is something which became by now a kind of role model for other legislators, and especially for discussions in other cross-sectoral legislation, even on Commission's level. So if you look at the current Digital Markets Act, for example, it's all benefiting from somehow from the experiences and the drafting we made back then with PSD2. So just having in mind that PSD2 was kind of innovative legislation back then. However, to come back to the strong customer authentication, I would like to stress 4 points. We already see that strong customer authentication has led to a decrease in fraud. And that is good for the payments market. That's the first thing. The second thing is, of course, we know it's a complex issue with many actors involved, as you mentioned. However, the timeline was, I would say, very clear from the beginning. And it also took into account the possible complexity of technological adjustments in workflows, because we had the directive back then in 2015. We had an implementation period until 2019, and then it got extended and prolonged by the EBA until the beginning of this year. So in total, we are looking back on 6 years' time in which the implementation of CA could have been taken place. And I can tell from the negotiation back then in 2013-14 that it's not a surprise for anyone that this legislation would come up at one point. However, we also perceived that the willingness to engage in this topic and to implement really differed between the different market players as well, for many reasons and also for good reasons. And that is why I would say, of course, we have to learn from the past. And of course, we have to look what could be adjusted maybe in future. And the review of the PSD2, Peter just mentioned it, is the exact place where this will happen. And of course, we have then also to look which worked, which could be improved, and how we can take innovative means of authentication into account and promote them as long as they secure an equal level of payment security.
Thank you, Doris.
Yeah.
But wouldn't you think that maybe instead of doing what the Commission or Commission of Member States tried to do in the past, which was with PSD2 to define very clearly how that two-factor authentication should be developed and what were the elements that should be taken into account in order to fulfill the process, if a less burdensome process based on the final outcome, that is to lower the fraud levels and to guarantee the security of payments, was set, maybe providing a bit more of flexibility to companies to reach this final goal. Wouldn't that have helped to avoid having a legislation that, from a technological point of view, maybe today, 2021, is already a bit old compared with what was drafted in or published in 2015, and how to avoid like these very same kind of issues being repeated with MiCAR, where we are trying to prepare the ground for something that is not fully controlled and that will also be evolving and developing very, very fast in time.
If you look, yes, I see your point. If you look at the PSD2 and the corresponding legislation, you can see that the Commission and of course the legislator, the European, tried to already back then take that into account, because it's like it's a two ways of SCA which are included or which are possible at the moment. On the one hand, we have the strong customer authentication with two factors. However, technologically speaking, it's left to the market how they fulfill the two factors. So we have their kind of technological flexibility already. Second, we also have a transaction analysis which could be taken into account with regard to card payments. And this is a kind of, so to say, principle-based regulation where you're free how you reach the fraud, or how you reach your fraud level, or bring down your fraud level. If you reached it and you make this analysis, you're already today free to be excluded from the SCA. So this approach is already included in the current legislation, and it already leaves some flexibility to the market how they fulfill it. However, of course, with new technological possibilities and new innovation, of course, further measures are taken into account and could be included in a revision. I think we would be open for it.
Thank you, Doris. Peter, I wanted to ask you a question on digital ID. Digital ID was first developed like some years ago by legislation. Now it's due to be reviewed. In the end, when we think about SCA, double factor authentication, and the fact of guaranteeing that who's behind the payment is who says to be there, we can tend to think that this strong customer authentication would be a kind of initial step for what could be the one of the main uses of digital ID. Do you think that we will manage to get the level of harmonization within the EU to make digital ID work? We will get a common standard that will make it feasible?
Well, the short answer to that question is I hope so. Whether we'll get there remains to be seen. Now, if you think about identification or electronic identification, you have to think also about, well, why do financial institutions, payment institutions, other institutions need to identify their customers? And there are really two reasons, two uses for identification. The first is authentication, and you already referred to that. So they need to authenticate transactions, and therefore they need to know whether the person using the payment instrument, the person at the other side of the line, online, is actually authorized to conduct that transaction, and therefore you need to identify that person with authentication methodologies. But the second reason why you need to why you need an identity is because institutions, financial institutions in particular, but pretty much all what we call obliged entities under anti-money laundering legislation, need to know their customers. They need to know who they're dealing with, so that they can also verify for suspicious transactions and stop and report these transactions where necessary. Now, so those are the two reasons for identification. The second question, and then you come to the question of harmonization, is well, identity. What is an identity? And also that is divided into two aspects. First is the identity attributes. What constitutes someone's identity? Is it someone's name? Is it someone's date of birth? Is it the place where they live? The places where they have lived? Is it their gender? Or some other feature? Or is it all of these elements together? And member states do not see eye to eye on this. Certain member states will, for example, use a physical address as the as an identifier, others would not. In certain countries, gender can only be binary. In others, there's more than two categories, and so on. So, the attributes of identity are, for the time being, not harmonized. The second is, how do you certify for identity? So, how do you demonstrate that a person has these attributes they need to have or they claim to have? We have a legal framework called EIDAS, which was done, which dealt with certification of identity for public use, for public users, public sector users, and the Commission is in the process of revising this so that it can be used also for other users. At the same time, in our upcoming review of our anti-money laundering legislation, and I'm really sort of giving a bit of a sneak preview here, the Commission is considering whether or not to also harmonize identity attributes so that we have a common standard across the EU of what constitutes someone's identity for the purposes of anti-money laundering. Because the biggest challenge which we see is that it is currently very difficult, if not impossible, to onboard customers remotely and across borders, because the standards for identification for know your customer under AML rules are all national and all vary. They pursue the same objective, the same aim, but what constitutes an identity, both in its attributes, but also in how you certify it, so both the AML legislation and the identity legislation varies. So we will make an effort to harmonize that. This is a highly sensitive issue, so I'm not certain whether we will succeed, because to harmonize this, we will need to come to an understanding among the 27 member states of what constitutes identity. And if you think about it, this is easier said than done. Thank you.
Thank you, Peter. Indeed, it would be an incredible development to have some harmonization in AML. So if EID helps to manage to at least getting close to that, that would be amazing. As we were saying at the beginning, Europe is currently discussing all that has to do with payments. So all the future of payments is on the table. Last year, we saw different strategical plans that were proposed and under public consultation. Now we have the open debate on this new proposal for legislation on DORA, MiCA. Others are about to come, potentially a review of PSD2, strategy on retail payments, and probably some legislation on instant payments. Doris, where do you think the EU or Europe as a region is heading to? And are we getting prepared for something?
Hopefully we are prepared for something. Well, yes. I think all the measures and all the plans and strategies you just mentioned, which the Commission presented last year, do show two things in my view. First of all, they show the strategic importance of payments, which is more and more perceived as an important infrastructure for European integration. And it also shows the growing political importance of the payments issue. And a common and integrated European market. And I think these two points, that is something which developed during the last years. For a long time, payments was kind of left to nerds, so to say, more or less. And now during the last years, we discover how important payments is for an economy, but also for the European market. And that we discovered to be more and more like an important infrastructure, which is important to preserve. And I think especially the retail payment strategy of the Commission, with its detailed and very ambitious plan, shows the importance the Commission also pays to the whole topic. And for me, it shows that we are heading to a further integrated and competitive market in Europe. If you look at the retail payment strategy, we have very important measures there, and we have a very ambitious timetable also in there, which with the main focus, as you mentioned, on instant payment, is probably of one of the next infrastructure layers next to direct debits and credit transfers when it comes to the payment transactions. We have the question you just discussed with Peter, the EID. Someone told me if you solved identity, you also solve payments in a way. So there is a close connection between these two things. They can profit from each other very highly. And then, of course, we have the whole issue of open banking and access to infrastructure. As I mentioned at the beginning, PSD2 was then back then perceived as a revolution in this regard. And if we look at the Digital Markets Act as a cross-sectoral legislation, it also really do a lot to could also be of great benefits for the open banking initiative.
Yes, well, the open bank is certainly, I would say, one of the most important outcome of PSD2 if we manage to get to it. But as we could see with APIs, the main problem that this lack of standardization or harmonization makes it very difficult to get to it within these very like 27 member states. And it's the same problem that we are also seeing in other regulations that are coming, that or EID, the use of EID. If there's no standardization or harmonization, we will still be struggling. But well, linked to this, Peter, we saw in the past that when the EU debated on GDPR, on data protection, the EU more or less sets the ground, not only in our region, but in everywhere else in the world. So that was the common standard on data protection and privacy that had been debated and set. Do you think that we could see something similar today with all these debates on crypto assets regulation? Would we be trying to guarantee some autonomy, independence, or trying to tailor the scene for big players or GAFA or others that could at some point play a big role in payments?
Well, in the digital area, it's often said that the United States innovates, Asia copies, and Europe regulates. Now, there is some truth in this. So not because we have a regulatory zeal and we absolutely want to regulate everything that moves, but the reason why we have European regulation very often is twofold. One is to create a single market, to have a common standard across our 27 member states, and therefore you need to develop law for this. And the second is motivation is to preserve our values, to set our values at a common level. Now, harmonizing legislation so that there are common standards for the single market across the 27 member states can be done at a high level of intervention or at a low level of intervention. And that usually is a bit of a sign of the time and of the preferences of the legislator as to whether it's more interventionist or less interventionist. And usually discussions in the European Parliament and in the Council of Ministers among the member states are a combination of marrying the more interventionist approaches of certain member states and the more relaxed laissez-faire approaches of other member states. And we strike a balance between those, and that then becomes the regulation. But of course, we want to set our values, our common values in that regulation. And that's, for example, what was done in GDPR. And there's a very strong consensus across Europe about the protection of privacy. And so the standards were set at a high level because we wanted to preserve those values. Now, there's a lot of talk recently about autonomy and strategic autonomy of the EU, which is vital, especially in the digital space, but also in other areas. But I'm not sure whether you can actually regulate for autonomy. You can't have a directive or a regulation on European autonomy or to preserve European autonomy, because the regulation that we are coming up with can be complied with by foreign operators as well. And they can also benefit from it because it creates a single market. And what we see is that foreign operators often are very good and often are better than European operators at complying with or taking advantage of European legal frameworks. And that's not because they have better technology or they've got better services, but because they look at Europe as a whole. They look at when these large companies come to speak to us, they always take Europe as a whole. they have a European-wide perspective. Many, if not most, of the companies in Europe, when they come and see us, they have more a regional or national perspective. They say, well, look, this is the way we do it in country X, or this is the way we do it in country Y, and we are thinking about maybe expanding to the neighboring country, but that's about it. So it's a question of business sense and perspective, and whether you look, whether you see things big or whether you see things small. So I would say, you asked the question, will we see more of this going forward? Well, GDPR is, of course, a standard which is being emulated globally. We've seen this also in other areas, for example, in the area of genetically modified organisms. Also, European regulation set the standard, which was then emulated in many parts of the world. And now we have a proposal for legislation on MiCA, on markets in crypto assets. And while there are a number of legal frameworks already around, I think it's fair to say that the EU is the first major jurisdiction that is setting in place a regulatory framework for crypto assets that both ensures or aims at ensuring market integrity and consumer protection, but that also wants to enable the crypto asset industry. And we believe that we will be setting a standard that will be emulated in other parts of the world. We definitely have a lot of interest in this proposal from all over the world. And the same is true also for our proposal on digital operational resilience, where also there we are saying, well, look, in the current day and age, technological resilience, digital resilience is so important that you need to have common standards on this. We have standards on economic and financial resilience in finance or prudential supervision, but when it came to operational resilience, standards were a bit sort of a bit of a mix of specific provisions, gaps, and so on. So we now want to set a comprehensive framework for this. And also there we see a lot of interest from other jurisdictions. So also there, I think that assuming the Council and the Parliament will agree to both the DORA proposal and the MiCA proposal in the foreseeable future, that both will become standards globally. Thank you.
Thanks, Peter. Well, it's true that there's a very thin red line between not killing innovation and regulating. You were referring to GMOs. What we saw with the GMOs regulation is how finally innovation left Europe in this regard, and Europe is importing GMOs from abroad. And this is something that it's difficult to set the scene and the good balance between regulating and letting innovation be, but with some standards and limits. And this is something that maybe something that we see with now the development of instant payment. Europe is pushing for instant payment to having a common solution that would compete with other kind of digital payment as cards, with this sponsorship or support of EP, the European Payments Initiative. But it seems that it will finally happen, but it's not the first time that Europe tries to achieve such a goal. It happened in the past with when they wanted to build a common scheme for cards. It didn't work. What has changed now? Doris, I would like to hear your views on it. Are we more engaged on finally having a proprietary solution for Europe, or it will be another trial that who knows how it will end?
Yes, I think that is something to be answered afterwards, probably in times to come. However, I think there are differences. But maybe to start, I mean, you mentioned EPI, the European Payment Initiative, and this is an industry initiative by several banks and acquirers in different member states in Europe, which have set up an interims company now in Brussels to start business. And this whole initiative, of course, as you said, is welcomed by many member states and by the European Commission as well, and is somehow in the beginning to start and operate. What is different to the initiatives you mentioned and we saw before? I think what is probably similar is the economic dimension. Of course, payments is still, as Peter mentioned earlier, a field where you can do business. What is different to back then is to other or to a former industry initiative is that I got the impression that the strategic importance of such an initiative is part of the business model, so to say. So also the market players are more and more aware of the importance of having not only a domestic card scheme or not only a domestic payments solution, but also engage in cross-border European ones from strategic business strategic view. And the second point which is different to former times, I would say, is also the political awareness has changed. It's higher than early or back then, and that's goes to what I said at the beginning. We see that payments itself is perceived more and more as a strategic and political matter to ensure as a kind of infrastructure to serve the economy, and therefore we are more and more aware that to have solutions on the market which operate cross-border within Europe is an important could importantly add to the existing market and to the competition in its market. If you look at the market or the market shares of cross-border payments in Europe, we still see, and that is something you mentioned at the beginning, Gonzalo, that there are only a few major players on the market when it comes to cross-border payments, and to add new competitors to this market could benefit and serve all customers in the EU.
Thank you, Doris. Well, I think that we'll need to wait and see how this evolves in the next coming years and see finally this project becomes live. We're almost running out of time, but I wanted to ask you a last question on CBDCs, on digital currencies. Because we were speaking about instant payments, about card payments, the unsolved problem of the past, but there's something that is coming. Apparently, the ECB will soon take the decision to launch a digital euro. The same thing is being studied in other regions of the world. What do you think that would be the implications for cash and the current financial model of credit institution as the main retail players? Maybe, I don't know, Doris?
Okay, maybe I start and Peter can add,
Peter
of course,
concludes.
and concludes. Yes, I start, he concludes. That's work sharing between member states and Commission. Normally it's the other way around. The Commission starts and the counter concludes. Okay, first of all, I think the EZB work on the digital euro is a very important project. Because we do need and also a European answer to the international developments we see looking at China and the US primarily, but also other countries already started working here, and that is something we should be prepared. The second thing is the EZB work is still at the beginning. At least that is our perception. And so there are still a lot of open questions. And depending on how you answer these questions, this will affect the role of cash, and this could reflect the role of banks. But these are decisions which are not yet finally made or are still under considerations. However, I think what is clear is that a digital euro will not substitute any cash. Cash will still be important. It could be an addition to cash as a legal tender. And I think that is one of the main purposes why we are discussing a digital euro from the EZB and not a private one. It's a potential to be legal tender. And depending on how you design such a euro, of course, the existing system, the existing banking system could be affected. And I think I'm quite confident that the ECB will take this into account and will propose or develop something which would include which would include the role of banks and would do anything that would not at least disrupt the existing system, so to say. But I think there are still a lot of questions to answer in this regard. Yeah, but maybe Peter knows more.
Well, not that I know more about it. Of course, we are discussing this with the ECB. I think it's unavoidable that there is due consideration is given to a digital euro, and that is to do with the emergence of blockchain technology or distributed ledger technology more broadly, and the emergence of private means of payment, if you wish, or private currencies. Now, if you look at existing payment systems, they are all basically systems of passing around commercial bank money and bank credit transfers. And I'm pretty certain that if we didn't have the systems as they exist now, and we had to start today with developing new payment systems, we wouldn't develop them the way they are currently operating, because all of these payment systems have very complicated clearing and settlement systems. Behind the scenes is all very complex. And a tokenized payment system that's based on blockchain technology has enormous potential. Of course, there's many questions that still have to be answered, but it is quite possible that blockchain technology will truly revolutionize the way payments operate. And if that happens, it is also important that there is public money on those blockchains, that central bank money can be transacted on blockchains, because if there is no central bank money available for transacting on blockchains, it will be private money. And we're not certain that that's a good idea in the economy as a whole, because we believe that public money has a very important role to play in our economy if our economy moves more and more towards blockchain. And I think that participants in the European Blockchain Convention believe that that will happen. Then central banks need to be active in this field as well.
Thank you very much. Thank you very much, Peter, Doris. We are 1 minute to 4 o'clock. I hope the audience leaves us with a clear idea on all the challenges that are on the table and all the discussions that are currently opened that will have something to do with the future of payments and of CBDCs. A lot of questions, but probably the following panel on CBDCs will be able to answer some of them. So let's see and continue watching. Thank you for this hour. It was a pleasure.
Thank you very much.
Thank you, Gonzalo. Thank you, Doris. Thank you, Peter. Thank you so much for being here today and sharing your insights. We had time to cover some aspects that people are interested, like payments, CBDCs, digital identity. We cover a few things. I don't know if we left something to be discussed, maybe for another panel, another day. Thank you once again.